Well, another record day for the market as the Dow Jones Industrial Average, it tickled 23,000. In fact, several times during the session, making this the third fastest time in history that the index has rallied 1,000 points. Now, before you begin to think that, well, it's too exuberant, consider the percentage gain was significantly higher the other two times. You had 24 days in 1999, the Dow was only 11,000. 59 days in 2007, Dow 14,000. So 76 days, the Dow 23,000. It's a little bit different, but obviously impressive. In fact, even today's session, the internals were anything but exuberant, as more than 500 more decliners than advancers on the New York Stock Exchange, and there were 800 more losing stocks than winners on the NASDAQ. Now, one big problem, I think, for the market right now is finding value and leadership. I mean, consider most cheap stocks are cheap for a reason, and that makes them unlikely to lead the market higher. Nevertheless, rotation today was out of technology and into things like restaurant stocks, underscored by a desire to adjust risk. In fact, there was a 15% trading range for Sonic, the hamburger joint. They posted mixed results. The stock actually tumbled out of the gate, but it reversed midway through the session, and then just about every name in the industry started to climb as well. And speaking of reversals, health insurers popped big time. Right around 2 p.m., that's when word came of a possible bipartisan deal on Obamacare. While we know there's still work to be done, it's clear investors are spying this industry for an entry point. And on that note, United Health had a great earnings report. It was up big all day long. After close, IBM posted the 22nd straight quarter of declining revenues, but earnings crushed consensus, sending that stock much higher. Big Blue going to be smiling tomorrow. Cloud business up 20%. I personally think it's got to be better than that to sustain this rally. And NAFTA news, big time, making it rounds. You have 5 rounds of talks, and well, the parties involved in the negotiations are getting antsy, and the talks now have been extended into the first quarter of next year. The trade ministers right now only agreeing that they're far apart on the key issues. And with this in mind, we should all consider what happens if this deal is actually scrapped. Now, there's no doubt there has been a huge sucking sound in the heart of America, particularly in manufacturing. There was some, like the U.S. Chamber of Commerce, that used to highlight manufacturing job gains, and it ensued after NAFTA went into effect. Remember, it started in January 1st in 1994. By March of 1998, there were 800,000 additional manufacturing jobs, but then they began to slide and finally collapsed in 2001, that recession. And as of last month, there were 4.4 million fewer manufacturing jobs. That said, there are some reasons dismantling NAFTA carries some tremendous risk. Canadians and Mexicans together bought a lot of stuff made in America, and that supports a lot of jobs. I'm not sure what the number is, 5 million, some folks say 15 million, others say, but here's the point. We exported $500 billion in goods and services to our NAFTA partners last year. So we need a better, smarter deal. No one argues against that. But how do we change the wheels on this moving tractor trailer without making things worse? By the way, go to wstreet.com. I'm going to give you an earnings play for tomorrow after the bell. I think will pop.